Nobody of you has probably ever heard me talking about financials because I'm not in the news business. What I'm doing is analytics, assessments, conclusions. I'm trying to add a little bit to the knowledge from my modest world, and I'm trying to share that. But I'm not going for this is a quarterly report and this is why Tesla is doing good or bad. However, this time it's a little bit different, simply because financials are a key part why I'm convinced that Tesla will get better out of the crisis than most automotive companies, maybe than any automotive company. And this is the reason why I'm recording this version of 7 reasons why Tesla will benefit from the crisis. Everybody who is today interested in financials of a company is looking for the quarterly report and is looking into the balance sheet and the key performance indicators. And I believe they all miss the elephant in the room here. Because we are not experts in financials, usually we rely on analysts that they translate the complex world around key performance indicators to us normal people so that we can understand whether it makes sense, to buy stock or to sell stock or whatever. And this is another problem because analysts are not experts in different fields. We see this, for instance, because analysts are not experts in battery technology. They are not experts in autonomous driving systems. They are not experts in chip technology, and they are probably experts in automotive. So what banks are doing, they're asking their automotive guy to analyze Tesla, and they just don't understand that this is more technology company where they should have 3 or 4 experts together, because to find one person that brings this knowledge together is simply impossible. So ARK Invest, for instance, is doing that. They have, experts from different fields who are sitting together, and then they evaluate the company and they publish their assessment, which is really very enlightening. But every bank is just putting their automotive analyst on Tesla, and what we've seen then at the end of the day is an assumption, an estimate. So they estimate where the company should be or will be in a certain point in time. And once the quarterly report is coming, they compare their estimate against how the company did. So that's another mistake, because at the end of the day, I don't really care how good or bad an analyst did estimate or assess how Tesla did or not. I'm interested how good is Tesla doing. So that's a completely different field and really should be looked at carefully. So if you're an investor, if you want to understand the health of the company, be very careful with what you're reading from analysts, simply because, besides the fact that they have certain interest, there is the notion of we know better because we are experts in automotive, and they just don't understand that this is a technology company they are looking at. So that's a big mistake. Secondly, the key performance indicators and everything you find in a balance sheet is, in my belief, not really in balance. So what I'm trying to say here is a company is just much more than cash flow, earnings per share, profitability and whatever. There is, safety, there's sustainability, there's long-term success, there is growth, there is invention, there is vertical integration, sustainability, and you name it. So there are a ton of things that are not reflected in a balance sheet, and therefore a balance sheet is just very much, incomplete. And it should be seen as that. A balance sheet and the numbers in there are probably the best what we have right now in order to understand what's going on, but it's still incomplete, and it doesn't help us very much if we want to come to the real truth to it. However, it's what we have, and in this video I will look a little bit deeper into it, so to give everybody an understanding what this complexity is about, because at the end of the day, we are all trusting analysts. Actually, I don't, but a lot of people do trust analysts that they do a decent job, but simply because they just show us a very small portion of the entire business of the organization, we should at least understand what they talk about. And the best thing is we analyze ourselves. I believe there should be a world where the normal person on the street understands these very complex terms. And I will try to explain in this video and in my article what these terms are about by analogy. So I'm trying to compare it to the normal life of people out there so that everybody can relate to it and just don't get lost in translation with these complex terms. To explain financial terms sounds frightening, right? So at least for me at first, but I'm really trying to make it simple. And as I said, I'm trying to compare this to the normal life by analogy. And so therefore, it shouldn't be that heavy and easy to digest and comprehend. Right now, I've been picking 4 to 6 different KPIs, so no worry, I'm not going for the full-blown package. This is just a very few ones, but a few, I believe, explain pretty well where Tesla is right now. So in order to understand, how they are doing in the middle of the crisis. And I'm going to start with market share, which is a very simple one and not even a KPI in the balance sheet or quarterly report, but it gives you a good understanding what is happening here. Number 2 is gonna be a little bit more complicated. This is adjusted EBITDA. So EBITDA is a strange name and a lot of people don't really understand the core and the content of it. And I'm going for simple explanation as well as, debt, net debt actually. And I'm putting the two in relation to give you an understanding what the company is doing and where they are heading to. So this is a very key number, I believe, and it gives a good sense and feel what's happening right now. Last but not least, I'm going for gross margin, which is, I believe, another very important one, and explain it in simple words again. And finally, operating cash flow and free cash flow, which are 2 other key elements I feel are really important in order to understand how an organization is doing in the overall context. So no worries, I'm not going for the full package. I could have picked other KPIs as well, yes, of course, but I believe the numbers I've been picking are good ones, and I don't want to make the video too long, so this should give you already a very good and solid understanding about the financials of Tesla in the time of the crisis. Market share. Market share is simply the amount of units or currency you are selling in a certain market versus other companies, so your competition. So let's assume you are in the refrigerator business, so you're selling fridges, and you sell 50%, so every second fridge that is sold in a specific market is sold by your company, so you have 50% of the market share. Very, very easy to understand. So now let's look into Tesla in terms of 3 different graphs. Number 1 is UK, and you see here passenger cars been dropping 97% in the UK in April, which is amazing. I mean, amazingly bad, and that's not good to hear, but that's just reality we are in. And guess what? Who is number 1 on the list? Who is the best company who's selling most? It's Tesla. Second graph, let's look at Germany. 61% drop in April compared to April last year, which has been really a very strong month, because the Model 3 came out in February last year already, so numbers went up. Still, although we have this crisis right now, Tesla is doing much better than anybody else, with a plus 10% number in April alone, and with a very good number compared to other companies year to date. So this is impressive too. And now to summarize this, let's look at what ARK Invest is saying. ARK Invest was claiming or assuming that Tesla will hold about 70% of the entire market share in terms of BEVs. And a few months ago, they've been adjusting that number to 22%. So it's been growing despite their first belief that the numbers will shrink, so less sales, although the BEV market will grow. And now we see from this graph that numbers are extremely positive in this crisis in terms of market share. So Tesla is really, capturing step by step more market from other companies. And we all know what's going to happen after the crisis. If you once have a market share, usually people don't abandon Tesla, so there's a very strong loyalty of that brand, and we can expect that this is going to continue, maybe even increase, after these difficult times we are in. So this is market share, very, very short and brief, and I think everybody knows this, or a few people know this already, and we could look in other markets where we have the same picture. So definitely Tesla is really, doing very, very well in terms of market share. Now it gets really interesting, because we are going to talk about net debt divided by adjusted EBITDA. Sounds extremely complicated, and it isn't. Just stay with me, I'm going to explain. Net debt is nothing else like you have debt and you still have some cash at home, you have your watch that you can sell, and if you deduct this from the debt, then you have net debt. So net debt is really the debt you just can't get rid of really quickly. That's all, net debt, very easy. It's gonna be divided by adjusted EBITDA. So what is EBITDA? EBITDA is earnings before interest, taxes, and amortization. Again, a very complex long term, but let's think about it. Let's assume you just get a salary. You are employed and you get money, and you just didn't pay taxes on this salary yet, so you still have to pay it. You have commitments. The same is true for interest, maybe on a loan or something, and you have amortization. You also have to adjust here. So in other words, EBITDA is like your bigger package of salary that you did get before you had to pay for all the commitments that you are still having. So it's a little bit a more positive version of the truth in terms of what kind of money you're gonna have available for the month or the year or whatever. So this is EBITDA, no big deal, right? So what is adjusted EBITDA? Adjusted just means if you want to compare your salary, your income, to the one from your neighbor, you probably have to make some adjustments. So this is one-to-one, like for like, because he may have some other, things that go in or go out, and this needs to be deducted so that you really can compare it one-to-one. That's all. So in other words, you have these two numbers. One is kind of the debt that you just can't get rid of quickly. So this is a bigger number that you are trying to manage over the months or the years to, pay back. And then you have this, income, which is a little bit a positive version of the truth. And if you look at the debt and you divide it by the income, then you get a number which is just a division. So it's a number that is either above 1 or below 1. If it's above 1, that means that you are not able quickly to, with your income, pay back all the net debt. And that's negative, because you're gonna have a lot of commitments, and you're gonna have for the future something you need to work on. If it's below 1, then you're in a situation with your current income, you're able to pay your debt back very quickly. That's all. So this is net debt divided by adjusted EBITDA. Sounds like a complex number, it isn't. And now look at this graph. What are we seeing? We are seeing that, Tesla had this number which was above 6, and over time they did better and better and better, and now they are actually in a situation that they can pay back everything very quickly, because the number is below 1. And this is a trend. So you see it clearly in the graph, and this is an extremely positive trend. And I can tell you a lot of other companies would be, really jealous to see that. And Tesla is really in a positive spot. Even if they would get higher a little bit here and there, it wouldn't make a big dent. So again, the same story. If you just look at this, key performance indicator, which I consider as a very important one, and ARK Invest is looking at that as well as other companies, it shows you that Tesla developed really very positive on both sides. On the one side, in terms of debt, on the other side, in terms of income. So positive news. Another KPI everybody talks about is gross margin. So what is gross margin? At the end of the day, this is simply the profit you make based on the revenue or in relation to the revenue. So a picture. Let's assume you're selling your house. You are going to pay a real estate agent for doing the job, and he's running around trying to find buyers. You have to do some beauty work so that the house looks nice. So in other words, you have costs associated to make the deal. These costs are, by the way, called cost of goods sales. So you have this cost associated and the deal is happening. You get your money, and from the revenue the real estate agent collected, you have to deduct the commission, obviously, and you had the cost for the beauty work up front. So in other words, you don't get the full number the buyer paid. And if you put the number what is left, which is the profit, in relation to the total revenue, the gross margin. So guess what? Tesla had a gross margin of 25.5% in the automotive business last quarter, and above 20% for the entire business. And both numbers are just amazing. I mean, think about it. That would mean they have about, let's say, 75 or 74% overall cost for everything in a very capital intense business industry. So this is amazing. And I can tell you, and you see this in this graph here, that this is compared to industry leading automotive companies, just an amazing number. And just have a look where Tesla are standing here. They are above everybody, although they are in the middle of a growth phase. So this is very, very, very positive outcome in terms of gross margin. And we can expect that Tesla, if they wanted to, improve this even further in the future. However, they can obviously also take some money to make more investments. But gross margin is a leading, indicator, and it gives you a very good understanding to what extent costs are overwhelming or out of order in terms of that what you are selling. And for a still young company like Tesla, 25% is just amazing, and no other automotive company I know is anywhere near. We are almost done. There are just two KPIs I want to look at. One is operating cash flow and the other one is free cash flow. So we know what gross margin is. So let's assume you are saying, well, in that number, there is also income flowing in, profit flowing in from other parts of the business, and you just want to look at the fridge business to stay with our picture alone and not, mix this up with other positive, revenue or profits. And if you do that, if you just, deduct everything else and just look at fridges, then you get operative cash flow, so for that operation. In other words, in terms of the world of Tesla, that could be just the operative cash flow for automotive business, which is very positive, as we already know. So, of course, as a company, you have other, plans for expansion. And if you think about our salesman, our entrepreneur with the fridges, let's assume he, is building an assembly line for fridges. And of course, this costs a lot of money. And, if you deduct the money he's spending for this capacity expansion from the operative cash flow, then you get free cash flow, which is kind of an expression of this is really what you have free, so you can work with that if it's positive, obviously. And if we do a step further ahead now and look at this graph, we do see that in the last quarter and in the quarters before, Tesla's development in terms of operating cash flow and free cash flow has been extremely positive. So we all know that Tesla's investing a lot of money in the Gigafactory in Shanghai, in Berlin and in other places in order to expand simply because the demand is so high. So if you deduct that, they have still positive cash flow, which is just amazing. I mean, if you think about it, where this company is standing right now, I just can say that everything I look into here in terms of, the balance sheet and the quarterly numbers is extremely, extremely encouraging and very much positive looking forward. So not paying everything too beautiful and nice here, but again, I mean, the numbers speak for themselves. And remember at the beginning what I've said about KPIs and balance sheet numbers. There is a mission Tesla has and is going after, which I believe is the right thing to do. But we also know that Wall Street looks at these numbers, and I hope that I could help a little bit explaining, what these KPIs mean. And there's just nothing to struggle here. This is very simple, straightforward understanding. I'm 100% aware that I simplified a lot of these KPIs and calculations. So there is here and there a little bit to add. But all in all, I hope that this was helpful. To summarize, if you look at the entire numbers, we have a company where the market share is growing despite a crisis and, with a lot of challenges for usual automakers in terms of demand. So Tesla is growing there, which is awesome and fantastic. Then we have a company where if you look at the debt ratio compared to the EBITDA, so kind of the gross income, if you want to say it like that, the relationship is moving to the positive below 1, which means they can pay back all the debt very quickly, which is just awesome and amazing. Number 3, we have a gross margin, so the real profit after you deduct all the costs associated, which is trending higher and higher for the operation in the automotive business as well as the entire company, which is another great positive and really fantastic. And finally, if you look at the expansion, so the cost for, building new gigafactories and deduct it from the profit, and you look at the operative cash flow as well as the free cash flow, so that is what left after you deduct the money you paid for building new infrastructure, for instance. It's another positive, and the numbers are, even growing partly or stabilizing on a high level, which is like printing money. So every aspect I look at, it's really so positive that I just wanted to make it clear in this video that I believe that, in terms of where the company is heading to in terms of financials, Tesla is really extremely strong, and their financial structure and development is really proving that in the crisis they are doing much better than anybody else. So this is number 6 of my videos. There is going to be a last one, number 7. And I hope this was helpful. I hope you liked my article on Clean Technica. And if you did so, subscribe for my YouTube channel. Feel free to support as a patron. And of course, if you want, follow me on Twitter. Thank you.